All right. Good evening, everybody. Thank you so much for joining us tonight for our conversation about life insurance. I'm calling it Life Insurance and Legacy. And tonight we have Sister Val Hawkins, who is a member of our church, and then Mr. Adrian Hunter, who is operator of State Farm Agency in Burton, Michigan. And so we're privileged to have them on tonight. If you would like, comment, share. If you're on, let us know that you're on. And also, if you have any questions, drop them in the chat as well. That way we can answer any questions that you might have related to the subject. And so I'm going to bring on now Mr. Adrian Hunter and Ms. Val Hawkins, and I'll allow them to introduce themselves on tonight. Um, Good evening to the both of you.
Good evening. Good evening. How
Evening.
are you?
Doing well, doing well. Thank you for joining us tonight. We have Sister Val Hawkins, and like you know, Sister Val, who does so much for us around the church. And so, um, Mr. Adrian Hunter, would you like to introduce yourself on tonight and let us know who you are and what it is that you do?
Absolutely. Absolutely. First and foremost, I'd like to say thank you to Pastor Taylor and the Antioch family for inviting me to hop on this call this evening and share my experience and be a resource to you all. So I want to say thank you for that. That's truly humbling for me. So I've always seen myself as being an asset to our community in a way that I can help educate and bring light to the subject of life insurance, especially seeing as though we're so underserved in this aspect, in this realm. So my name's Adrian Hunter, born and raised Flint, Michigan, and I currently own and operate a State Farm agency in Burton, Michigan. I've been in the insurance industry now since 2010. So 12 years, going on 13. I've been with State Farm. This is my seventh year as an owner operator of State Farm, of a State Farm agency. Um, we're located in Burton, Michigan. Been there since February of this year. Prior to that, we were located in Warren, Michigan. We currently have four staff plus myself that are in the agency, and we cover all aspects of insurance and financial services. But one of my passions in this industry specifically has been life insurance. So we make it a point in our agency to try to bring light to that conversation and not shy away from it and be a resource for our community.
Awesome, awesome. And so this month is Life Insurance Awareness Month.
Yes, sir. Yes,
Okay,
sir. September of
okay.
every year, Life Insurance Awareness Month.
Okay, so this month we're pushing heavy on life insurance,
Yes.
life insurance. But of course, you guys offer all aspects of insurance. And so again, if you have any questions that you want to ask related to insurance, again, drop them in the chat. But tonight I'm going to ask that Adrian will give us just some background on life insurance and the importance of it. I'm of the belief that uh, life insurance is important. Um, and I've learned of the benefits while living, but certainly I do want to push it from having some security for your family once that day of demise does come. Reality of it is we all gonna die one day. As harsh as
Yes.
it might sound, all of us have a time. But what I want to see for our community is us not having to do chicken dinners and call the church and do a GoFundMe to have a funeral service and for burial. And so not only can those costs be covered, but then also with life insurance, being able to leave a legacy. And so that's
Hmm.
why I tied life insurance and legacy to this conversation. And I'm sure we'll get into it some later. But I've also realized how those who, I would say, good stewards of their resources, find a way to use those policies as a benefit even now while they're still alive. And so it's not something that we always have to wait to see the benefit in death, but there can also be some benefit to having insurance while alive and really taking advantage of that. So I guess I will start tonight with my first question. What is life insurance? What does that mean when we say, you should have life insurance?
Absolutely. Great question. Foundational question to this conversation. What is life insurance? And Pastor Taylor, you made a lot of great points there in just the briefing of bringing up the topic. Life insurance, we have a saying in the industry, life insurance is love insurance. If you have someone that you care about, whether it's a grandma, mom, a child, a brother, a sister, anyone that has any that you love and you care for, and that would be, in any have any financial interest or have any uh, just going back to financial interest, if something were to happen to you, we want to make sure that life insurance is in place so that families do not have to grieve. And like as you said, Pastor Taylor, have the fish dinners and the GoFundMe accounts that we see so often. So life insurance is the foundation of any financial plan as well. So when you talk about life insurance, it is a financial services tool. It's used as the building block of any financial plan, and an example I would use is if you were building a house or if you were building a church, for example, you have to have your foundation. As you're building a financial plan, say you're saving for your retirement or you're saving for your child's education, you have to take into account that, things happen, life happens. And in the event that it does, it's very important that you have yourself protected and your family protected so that the things that you wish and hope for your family and pray for come to fruition, whether you're on here or you're with the Lord or your demise comes unexpectedly.
So with that being it being the foundation, even before we get to life insurance or in life insurance, what different types of insurances are there and what do they cover?
Absolutely. So, life insurance, there's two main types of life insurance. When you talk about life insurance, you have a term life insurance, which is the most common. Then you have your permanent life insurance products, which are around, but they have a specific need. Sometimes these are the ones that have living benefits that most people aren't aware that are out there and kind of what the benefits are. So, a term insurance product, just to give you a brief understanding of each, term insurance is exactly what it sounds like. It covers you for a specific term. So the most common ones out there, it's maybe a 10-year term, 20-year term, 30-year term, and that allows you to you lock in that rate for that amount of time. It cannot increase, and or the price cannot increase. You cannot lose it as long as you're paying your premiums, and it gives you that dollar amount of insurance. It's usually inexpensive. So that one is more common. It's the same one you have maybe through an employer. It allows you to have the life insurance while for that term that you're with that employer. So that's the more common one that we're all used to. And then you have your permanent insurance, which same deal. You lock in that rate at your current age, current health, and allows you to make sure that regardless if you pass away sooner than later, or you live to be, 100, God willing, you'll be able to have that insurance in place long as the premiums are paid. And that policy also has a component of it, cash value, where you're able to utilize the monies that you pay in premium, and use that while you're living. You don't have to wait until you pass away in order to be able to use that benefit. Like we can't hear you.
There we go.
There we
Okay,
go.
thank
There
you.
we go.
So you talk about whole life and some of the cash benefit and value that's there. Um, it's amazing because even after getting some insurance things in place for myself, uh, I've all of a sudden heard more conversation around whole life. I even said something about it on Sunday because I heard a pastor just the next day talk about how he was really comparing our relationship with Christ to term life versus whole life, and that when you have that relationship with Christ, it's like a whole life policy. Yes, there's a benefit
Mhm.
at the end, but there's also benefit while being alive. And then just today, I get online and there's someone who's talking about whole life, but the fact that I guess the way they said it was maybe their grandparent got a whole life policy on them, and as it grew over time, pulled from it, bought land,
Yep.
bought different things, and put them in a position as a family to have accumulated more wealth just off of what they were able to pull from that policy over time. And so I guess I would ask, just for people who are wondering how that is done, what does that look like? How much can you get out? Is it just, can it only be used for certain things? What are some of those benefits to whole life when you can pull something out? And, what are the limitations, things such as
Right.
that?
Absolutely. Absolutely. So I'll touch base on that, and I'll give as much detail as I can. So essentially, the whole life policy, as it relates to cost premium dollars, because there is a finite number that is going to be paid out, the actual premium dollars collected is can sometimes be 3, 4, even 5 times as expensive as a term policy. Statistics will show term policy has less than a 2% payout rate. So, and that's why it's priced so low, because the insurance company knows that, hey, the younger we are, the likelihood of us passing now or in our next 10 years or 15 years is very, the odds are low. Permanent insurance that builds cash value, we know for a fact that whether this person lives to be 45 or 105, we have to pay this death benefit. Now, the excess dollars collected in premium, there's a sub account within the insurance policy that builds cash value. That starts building it day one. It's in most whole life policies, it starts building day one, and there is no limitations on when and how much you can pull out of this policy. So the analogy you used is your relationship with Christ being forever and for your whole life. That's exactly that. You're investing into this policy, you're able to build cash value, you gain equity. There's tax advantages to the policy as it relates to how it's grown and the taxable, what's taxable as it grows, which is zero. So that's the tax advantage of it. But when you go to pull it out, there is no credit application. There is no, limitation on how much you can get out. So you can come to me and say, "Hey, Adrian, I'm thinking about redoing my bathroom. I got a quote for $4,800 to do that, and I'm going to be able to write you a check on the spot, or get that check in the mail to you as soon as possible to be able to take care of that." Same thing with being able to purchase whatever type of asset that is. I've seen people take cash value for down payments on a home, or to pay off their home, or to help with their daughter's wedding, or to purchase a vehicle for their child as they age to 16 and get to that driving age, as well as just a wealth accumulation tool, being able to pass that asset down tax free to heirs. That's huge in our community. And that's one thing that the education piece of it that I'm so passionate about, is just understanding that life insurance has much more benefits than we even know. It's much more rich as it relates to what we can do and what's been hidden from us, I would say, or lack of resources. For lack of better terms or better analogy, is that we just not understanding what it can do for us while we're alive. But to answer your question, no limitations on the amount, no limitations on when and how you can pull it. It's best to sit down and go over kind of what your goals are and your budget to see what fits as far as the life insurance amount and what that premium looks like. But as far as the flexibility of the product itself, I would say it's a great financial tool for someone to have to be able to generate and transfer wealth.
Absolutely. And so that's kind of where I was getting at, how is it used as a wealth building strategy? Because I hear, and I'll just be quite honest, I hear other races outside of minority races speak more, well, they don't really speak about it, but the conversation being centered around, that's where a lot of their wealth is. It's in these insurance policies. Is this something that you can put more money into, and how is that done? Like, can you put more money into a policy? Um,
Yeah, yeah. So this is a estate planning tool when you start talking about wealth transferring. So what happens is when you speak of other races and their education point to it, is they use it as a tool to say, hey, if we're wanting to keep money within our family and be able to pass wealth through, the government plays a big role in taxation as it relates to transferring wealth from one generation to the next. And the way to avoid that is to take assets and put it into life insurance, because one of the biggest benefits of life insurance is that it bypasses probate, it bypasses um, estate tax. So if you were to, an example with that would be if I were to, pass away, I had $100,000 in my check savings account or in my 401k. Before that money got out of that account, Uncle Sam is going to have his hand in that pocket, and it's going to be taxed at ordinary income rate, right? So you're going to be looking at, for $100,000, probably a 22% effective rate if you're not already a high earner. That's on the low end, up to about a 37% effective rate. So you're looking at giving the government off the back, where if I was strategically funneling that $100,000 into a life insurance, I could be transferring 200 to 300, depending on my age and health, to the next generation, tax-free, bypassing probate without any of Uncle Sam's involvement. Because once it gets into that life insurance product, it's protected from the tax. And that's how wealth is transferred from one generation to the next. And the education piece of it is once you get it and you're a recipient of life insurance, it's easier for you to take those proceeds and say, okay, I'm going to make sure that I do the same thing that grandma did for me, for my child or my grandchildren, so that they can inherit money just as I did when I got of age, through trust, through life insurance. Because that's essentially what happens is they go and they get it on them when they're babies. They come in and they say, hey, I had a baby a month ago. I need to go ahead and buy $250,000 worth of life insurance. And I'll say, okay, that's going to cost you, I don't know, easy math, $5,000 a year for 10 years. Oh, it's only got to give you $50,000 for 10 years, $5,000 for 10 years. Yes, ma'am. And then that 250, the $50,000 is inside of the life insurance's cash value, and it's growing, whether you give me another premium or dollar or not, at a 3-4% clip, way better than any bank, way better than any CD. For the remainder of her life, is paid up. You pay $50,000 to transfer a guaranteed 250. That's to me, that's unheard of. But then let's compound that and say, what if you wanted to get the $50,000 back? You can still get the $50,000 back, and you transfer a $200,000+ policy for. And that's the wealth cycle I've seen and been accustomed to, that we are missing the bar by a lot. We don't have this conversation enough.
Right. And then even if you pull that 200, even if you pull that 50,000 out and you pass on a $200,000 policy, that 200,000 continues to grow.
No, you're passing on the death benefit at that point. So the death benefit. Death benefit goes to, and they just repeat the cycle. They take the $200,000 and they go buy another life insurance policy for $50,000. You see what I mean?
And it keeps going.
And it just continues to go. So they're transferring wealth from generation to generation to generation, or they're funding a trust, or give or take from that. There's a lot of different strategic things that happens with whole life insurance as it relates to wealth building that we can sit and talk about, and we can go over. I can go 10, 12, 15 different ways as it relates to a specific scenario. But the biggest deal is that it's passed through tax-free. You have access to the cash value at any time. You essentially become your own bank. That money's your money to do whatever you want to do with it. And you're transferring wealth for $0. It happens all the time where, that money, because we say 200,000, you're going to transfer more than 200,000 because it's growing. It's been growing. The baby was 1 month when you took it out. You paid for it at year 10.
And so, I guess that's what I was getting at. So if you don't die to 75, that whole time it's just growing, and then once you die, that death benefit is what's paid out.
Absolutely, yeah. So the 50,000, the money you paid into the cash value is growing. The death benefit is growing as well. So by the time you get to that baby gets to age 70, 75, 80, that death benefit could be closer to $400,000 or $500,000. And that cash value account could be $250,000, half of that. You could get back that money and still leave $200,000.
Right.
More money than you put in and still leave $200,000 if you plan that correctly. If you go ahead and you're educated, you look at it from that standpoint and you plan that out that far. That's exactly what happens when they talk about wealth transferring through whole life insurance.
And so I know there are some who have there's some generations that have a fear of banks and things like that. So you're telling me that instead of having $20,000, $30,000 under my mattress, I should put it in a life insurance policy.
Yes, that is. I mean, that's a strategy because money under the mattress, it's always losing buying power. Inflation, as we've seen, especially this last 2 years since COVID, has gone through the roof. I mean, a piece of wood that I used to pay $40 for is now 80. It's double.
Right.
You see fuel, you see things, buying power for that same $20,000 that was under the mattress. Well, you may be able to buy, something for 20 grand in 2020 might cost you $23,000 now. So you've essentially lost $3,000 worth of buying power by just letting it sit under the mattress.
Versus putting it into a policy and you could have paid something up or whatever that looks like, and it could be growing
Absolutely.
instead of sitting under the mattress. That's what I'm trying to get at. I know with some people out here with no life insurance and money sitting at home or no life insurance, and they gonna die and they gonna call the church and say they want a funeral and can the church pay for it? And I'm gonna say no. You had Adrian Hunter and Val Hawkins on here trying to get you covered before that happened.
Yeah.
Okay.
And that's our main thing. We Val and I would talk about this, and she's my road dog. This is my, she's part of our team. She's my office manager. She has just as much conviction when we speak about this as I do. But our deal is to, it's important for us to get as involved as we can in communities so that we understand the value, the value of having life insurance and what it can do for us. And like you said, if you have money under the mattress, I mean, you're buying yourself time. You're buying more money to pass through tax-free. All the way around from a math standpoint, it makes sense. It's just, training our minds and understanding, getting us a better understanding and having access to resources to someone that's willing to sit down and say, hey, Pastor Taylor, come into office. Let's talk about it. And I'm going to answer any question you have so that it makes sense for you and you actually understand that.
Absolutely. Absolutely. So I'm gonna ask a couple questions, might be silly, but I know somebody else out there is thinking them. So when I die, how long does my family have to wait until they get the payout?
There's no wait. So there's contestability period that's built into every life insurance plan. That contestability period with State Farm is 2 years. So it's 2 to 3 years, depending on the carrier. I know State Farm's 2. So what that contestability period means is that in that first 2 years of death, State Farm can challenge any of the application. So a basic example of that would be, we do an application. You tell me, hey, I don't use tobacco products. We write the application. State Farm issues it with the premium as you not using tobacco products. So it's, $20 cheaper a month. You pass away in 6 months. Comes back, your doctor. Your doctor comes back and says, "Well, yeah, he did smoke cigarettes. I actually gave him a patch or something. We talked about it 2 months ago or 7 months ago, which is right around the time you did the application." State Farm gets that doctor record. We won't deny the claim in that case. We would essentially say, "Hey, Taylor family, instead of it being $30 a month, it would have been $50 a month. So you owe us $20 a month for the last 6 months, and we're going to pay this $150,000 claim."
Pay it out, but you got to pay for that.
The difference,
little error, the error margin.
Absolutely, the error margin. Now, if it was something that would have made you uninsurable, if you said, "Hey, you just conceal that you had cancer at some point in the last 2." If it was something that would have made you uninsurable, "Hey, I had cancer. I beat it, but it was in the last 2 years." There's a 5-year waiting period for something like that. And you don't tell me that. I don't know that. I submit the app and you pass away in the same 6-month period. State Farm would refund your family the money because you would not have been eligible had you had the application.
Right.
Now, given that same scenario, 2 year, 1 day. Doesn't matter. You don't even ask the question. All we need is an obituary and or a write-up that you passed away, a death certificate, and I'm delivering a check. So
Okay.
there's no waiting period on that at all. And it's one of the biggest misconceptions I want to clear up too is that when you list a beneficiary, most people, I get this question a lot. They feel like the money goes to like the funeral home, or it goes to wherever they want it to go to. No, it goes to who you name as the beneficiary. So if you say, X, this person's getting that check, it's not going through. Nobody can intercept that. There's no interference to where that money goes when you list that beneficiary.
Okay, so I guess that would be that was really gonna be my next question. Who pays for the funeral? Does that come out of the policy? Does that come from the person who that benefit is taken sent to?
Yep. So the person who's listed as beneficiary is responsible to handle those
Damn those
final.
things.
Yep. Yep.
Okay. Okay. So what other type of before we get off, I'm gonna see if anybody has any questions. Again, if you are watching, like, comment, share. Somebody in our family, somebody in our sphere of influence, our friends, needs to know about life insurance and the benefits that come with it. So if you have any questions, drop them in the chat tonight so we can get them answered in the next few minutes before we jump off of here. But just a moment, whether it be Adrian Val, you done sat on here quiet the whole time. I don't know if you want to get into your manager role right now, but is there what other type of insurances did you guys offer?
I'll fill that one as well. So we offer everything from auto insurance, renters insurance, homeowners insurance. Those are a flagship product. State Farm has been in the insurance industry for now 100 years. It's our 100-year anniversary, and we've led the country for over in insurance as far as more policies in force for the last 65 years straight. So we offer those as our flagship products. We also offer business insurance. So we get a lot of contractors as well as small businesses that we insure. We do the life insurance piece, and we also offer health supplemental products, very similar to Aflac. We offer some short-term disability as well. And we're one of the few agencies in the area. I'm a registered rep with FINRA, so I do it from a financial planning standpoint. I can talk to you about the basics of budgeting and savings, all the way up to distribution strategies around annuities, as well as how to place money into a Roth IRA, a traditional IRA, how to maximize your 401k. These are all things that I specifically deal with in the agency, but we have a plethora of different products that we can offer and be able to meet people where they are and help them with whatever need they have.
Okay. So we did most of the talk. I'm gonna get Val to say something now. I'm gonna see if she answers. So Sister Val, to our church family, why would you say, why do we need life insurance or insurance period? Why do we need it?
So you can prepare for the unexpected. That's why. I mean, that's what it is. It prepares you for what ifs of life.
Mm-hmm.
What if my house burns down? What if my car gets stolen? What if I die? It just prepares you for the unexpected. So that's why everybody should have it.
And all types of insurance.
Mm-hmm.
Auto, home, renters.
Yes.
I was actually when I life insurance.
Life.
Listen,
yes.
They are in. What time does the office open tomorrow?
9 a.m.
9 a.m.
I'm available.
Yeah, those
when it comes to life insurance, I'm available.
But we want to push that, put a push on it. If you don't have it, get it. Call in the morning. You can get term life, you can get whole life.
Yes.
I'm of the benefit, and I do know it costs a little bit more, but knowing the benefits that come with whole life, I think that we as a community need to push that conversation more, because I do know that there are others who are taking advantage of it and using it to transfer wealth from one generation to the next, or even if they're not transferring it, using it to live a little bit more comfortable now for making an investment at an early enough time. And so I would encourage us to go ahead and get life insurance. Yeah, you got something? You muted.
Oh,
Adrian, can you just touch? I want him to touch on one of the policies that we offer, the limited pays.
Yeah, so I absolutely limited pay, which is what we talked about. So whole lot, first let me get back to the basics of life insurance and just going over the fact that life insurance itself is based off of age and health. Those are the two main things that control the premium, that contribute to the premium or what the premium basis is. Age and health, because those are the two things that kind of give us an insight as to, from an insurance underwriting standpoint, time before death, what type of ailments cause that to be accelerated and what type of health conditions cause it to be decelerated, being in better health, working out, being fit, so on and so forth. Those things can actually contribute to helping you with a lower premium as well. But we offer a product, a limited pay product that we touched on it. You can pay it off in either 10 years, 15 years, or 20 years. And I noticed that there's a comment in the chat based on the example I used earlier.
Can you see the whole comment?
Yes, it does. It says here that does it continue to grow, meaning the cash value, not the death benefit. The answer to that question is yes. They both continue to grow. So that's the advantage of the limited pay, and that's why I like the limited pay. It's Val's favorite product. She probably won't it. Well, she probably will admit it. That's her favorite deal. She pushes it a lot. But the limited pay it allows you to pay off the life insurance in either 10, 15, or 20 years. As basic as that. You build the equity, you put into it for 10 years. You either put into it for 10, 15, or 20 years. You don't pay any more money in. And it's likely close to, for a baby, it's that example. But for somebody who's middle age, you might put in $40,000 for $100,000 for 10 years. So you might pay $4,000 a year for 10 years for $100,000, or you might pay $5,000 a year for $100,000. You're still paying $50,000 for $100,000 in a 10-year on a 10-year paid in full plan. But once you pay that $50,000, they can't take it from you, regardless of what happens. It's enforced. And to answer your question in the chat, yes, the cash value continues to grow. So you may have given it. It's probably going to be more cash value in there before you pay it off by that 10th year. You're going to have more money in there than you put in, because you're accumulating a dividend as well as you're paying an interest rate on that sub account. But once you stop paying 50, the illustration will show it's going up every year. So you look in there, next year it might be 54. Year after that might be 59. Year after that might be 63. And you're not putting anything into this policy. So you got this growing asset that you can draw off of that's earning you dollars every year, that is tax-free, because that money's not taxable. That's growing. If you put that same $50,000 in a CD and it had a 2% return, you're going to get a statement at the end of the year that says you owe us taxes on that 2% growth. Or they don't pay 2%, they pay less than 1%, but whatever they pay, that statement's going to say Uncle Sam needs their money. Where that inside that life insurance policy is not. It's going to continue to grow. So yes, the cash as well as the death benefit will continue to grow even after you pay it off in that 10, 15, or 20-year period.
And I just think, you do the math, you can't beat it. Think about what we were doing, just think back 10 years ago and what we had frivolously spent $4,000 or $5,000 on over a span of a year. And then we can look back 10 years and say, man, had I just made an investment 10 years ago into this product, I could have now, it could have cash value and I could be able to pull from it when the unexpected comes. We got another question. You see this next question is growth based on the stock market?
Yep. Sheila, great question. That's an outstanding question. No, it's not. Very simple. This is an internal rate of return that State Farm pays. It's based off of just their dividend rate as well as the interest rates, but it's a guaranteed rate, so you'll never go backwards, and you'll always be able to participate. So right now, I think the guaranteed rate is at 3.35%, and you're getting that rate. It will never go lower than 2. In our base forever, it'll never go lower than 2. But as far as interest rate, but it'll reflect the economy. And a lot of times it's between 3 and 4 as far as that compounding rate that's being paid on that cash value account. So Absolutely not. You're not going to get a big return because we're not in the stock market. That's another thing. The security there. If you have low risk tolerance, you can rest assured that a life insurance policy's cash value will not go backwards.
Yeah, and I think that again, I want to encourage everybody who's on tonight. We're getting ready to jump off. If you got any questions, get them on for the next couple of moments while we're on here. Is there anything that we have not asked or have not covered that one of you might want to bring up before we get off on tonight?
Yeah. I want to say thank you again. I mean, this is awesome. I'm glad and honored to be on the phone call, and I want to just reiterate that please use us as a resource. This is something that we're passionate about. We're not far. We're in Burton, and we come to you come to your office, you come to our office. We want to be able to educate people and give them the knowledge to make an informed decision on what's out there for them and their families. So whether it be getting a starter policy to get you used to the concept of life insurance, and us transitioning you slowly into more permanent plan, it's important that we get you something in place while you're healthy before something happens. Because again, that health and age plays a major factor. I've been on the other side of the table too many times where wait 6 months, and then in 6 months they go to the doctor in the meantime and something's come up. And now you got a 5-year waiting period, or you can't get it, or now you're uninsurable, heaven forbid. So these are things that, it always does have some punctuality to it, and saying, hey, you need to get this in place outside of work. Because that's the other main objection we get is, hey, I got it at work. My dad had it at work. Guess what? Didn't work out so well for him when he retired. We didn't have anything when he passed away. I was scrambling to make it happen because they're looking at me because I'm his son. You look at it like, well, dang, Dad, and I couldn't grieve properly because Dad didn't put anything in place, and now I'm going, into my savings account trying to figure out how we're going to pay for a funeral for Dad because he kept saying, I got it at work, son. I don't need that. No, I'm not signing an application. I got it at work. And, you just got to make sure that you understand that when you leave, that policy does not go with you. And when you leave, you're going to be older. You may have a health ailment, and it's going to be hard to get or expensive. So we always encourage people to look into it, get it early. Well, we are more than happy. Our doors are always open. Give us a phone call. We'll schedule a time, 15, 20 minutes, to kind of go over your situation and make recommendations and answer any questions you have for us.
Awesome. I want to make, and we'll figure it out. I know if I put one more thing on Sister Val plate, she'll probably want to choke me. But I'll say this: I do want to make at some time make her available, or maybe others from the office available on a Sunday morning for those who might have questions or want to find out right there on spot, just about what they can do, what their options are. And I want to encourage you, for everybody who's listening, tomorrow, if you do not have life insurance, at least find out. If you don't have car insurance, homeowners insurance, call to inquire, at least begin the conversation. Get a quote, be a little bit more informed than what you were on today. It is my prayer that this was beneficial to and for us. And I'm going to put in the shameless plug for the Antioch Baptist Church right here. If you're a member of Antioch, get insurance, but also consider leaving your church as a beneficiary. And it does not have to be the whole policy, but part of it. And I say that again because this is how other communities take care of their religious institutions.
Absolutely.
We often wonder, how do some of these institutions have 2 people sitting in them, but they running all the lights, they cutting all the grass, they running all the sprinklers and everything. It's because there were those who took time to leave something to their church beyond their lifespan. And so Antioch is my prayer, and that even myself can be an example. But as we have this conversation, let's consider leaving our church something, but then even beyond the church. I believe that when we're faithful to the resources that God gives to us, He'll bless His church. But this is a more serious conversation for your families to be secure, for you to have opportunity not only to transfer wealth, but to also be able to do some things in this life for yourself. Jesus says, I would that you would prosper and be in good health. And I think part of our prosperity is tied into some of these things that we're not well informed about. And so hopefully, and I'm going to even say this, I'm going to invite you back again, Adrian and Val, maybe we can do this maybe right after Christmas, going into the new year,
Yeah,
while
absolutely.
people giving out gifts and all of this. A good gift might be some insurance.
Oh,
A
yeah.
good gift might be a policy for your children. I know people, we're going to be buying everything else, but it may be a good thing to leave a policy or take out a policy that can start accruing some value now. So when your child graduates college, they can have some money to put their hands on to. When they graduate high school, they can have some funds to put their hands on to. And so again, I pray this was beneficial. We're going to get off here tonight, but to Adrian and Val, thank you so much for taking some time to explain this to our congregation and whoever might have watched. Again, if you're watching, share this. I know that we know others who need to hear this and be a part of this conversation. Val, you got anything before we get off tonight?
No, I'm good.
Okay. All right.
Thanks.
Well, again, thank
Thanks
you.
for having me.
All right. Thank you all again.
Awesome.
God bless.
All right. Take care. Bye. All right, Antioch, again, thank you so much for being on tonight. Again, like, comment, and share. And again, I would implore you to use this as a resource. Adrian Hunter State Farm, where our own Sister Val Hawkins is the office manager. The number is 810-820-8552. If nothing else, if you do not have life insurance, please begin to have this conversation with your family, with your friends, and find out, get the necessary information, get yourself a quote. Because I believe as it's Life Insurance Awareness Month, I want us to be the very best that we can be and take advantage of all the resources that are within reach. We just have to take advantage of them. So again, family, listen, I love you. There's nothing you can do about it. I pray that you have a great night. And again, if you have any questions, reach out to Sister Val Hawkins, reach out to Mr. Adrian Hunter on tomorrow. Adrian Hunter State Farm, located right there in Burton. 810-820-8552. All right, family, listen, have an amazing night, and I'll see you all soon. Be blessed.